Hey, thanks for coming and watching this video. This is Dr. Barry Burns with Top Dog Trading, and today we're going to talk about how to learn day trading. And this will be a multi-part video, either 2 or 3 parts. We'll see how it goes. I don't want to rush through it, but I like to keep the videos short and to the point. And we'll need at least 2 videos, perhaps 3. So here we go. This is how I day trade. And it's actually not too complicated. It's actually quite simple. Not saying it's easy. Trading is not easy, but what I do is very simple. When I went to Chicago and studied with some floor traders there, Chicago Mercantile Exchange, I actually was doing pretty well trading, but my system was very complicated, and I was actually proud of that. And then I went there and got humbled because those guys were making more money than I was, and what they were doing was more simple than what I was doing. So I came back and, with their help and so forth, I simplified my trading methodology, and it's been better ever since. So you don't have to be all that complicated. But what I do is I look at 5 variables, 5 things. That's it. And, Einstein once said you've got to make everything as simple as possible, but no simpler. And I think that applies to trading. I don't think he was a day trader, so I'm pretty sure he wasn't talking about day trading. But I think it still applies to day trading. In fact, it very much applies to day trading. You want to keep everything as simple as possible. Why? So that you can keep your mind clear. Your signals are black and white. Mine is very objective, very rule-based. But he also said no simpler. What he meant by that was, or at least as it applies to trading, is you need a certain number of variables, non-correlated variables, to establish a probability scenario. And that's how we put the odds on our side. Now, not all of our trades are winners, obviously. There's no certainties in the market, but we can put the odds on our side with a successful trading method. So here's how I do it. I look at 5 energies, by the way. So the first energy that I look for is the trend. Trend simply refers to the direction of the market. Webster's dictionary defines trend as the extended general direction of something. Now, a lot of traders use short-term indicators or moving averages or price patterns to measure trend. And what they don't realize is they're not measuring trend because it violates the actual definition of the word, again, which is to extend in a general direction. Now, it's not only important to have a long-term indicator or pattern to identify trend because it's congruent with the meaning of the word. It's also important financially so that we have a good reward-to-risk ratio. We want our winners to be bigger than our losers, and therefore we want to be trading in a direction that's going to continue for a while. So I use something really, really complicated. It's called the 50-period simple moving average. Okay, so it's not complicated. It's the simplest thing in the world. It's one of the most commonly used moving averages, and it does do that. It measures the general direction of the market. It is a lagging indicator. And, a lot of people say, well, I don't want any lagging indicators. Why would I want that? I want all leading indicators. And I understand that. In fact, that's what I used to say to one of my mentors back in the day when he told me you always need a lagging indicator in your chart. And I thought he was out of his mind. It took me a year after he told me that to finally figure out what he meant. And it's not the topic for today, but maybe we'll do that in another video. So anyway, 50-period simple moving average, one of the most commonly used moving averages. And, it meets the definition of the word. Now, could I trade this by itself? Absolutely not. Let's be clear. Indicators are just that. They indicate. That's why we call them indicators. They don't tell, and they definitely don't make us money. Otherwise, we'd call them money makers. So they indicate, but we use them as tools to give us an objective measurement of something, in this case, trend. So, all right, so the trend is up. We had a big gap here, at least the indication of trend is up. It's a kind of a gap and go situation. So we're looking to go to the upside. Now, trading the direction of the market is not enough. Again, that's lagging, so we can't rely on that to make money, but it's one piece of evidence as we put our puzzle together. Now, here is my momentum indicator. All right, and you can use all kinds of things for this. RSI, stochastics is a momentum indicator, the indicator called momentum, MACD, a lot of different options for you. But look what's happening here. So momentum is going down. Momentum is going down over time, while price is going up. And this is a problem. Actually, most of these momentum indicators don't really measure momentum literally. What they're literally measuring is acceleration. I think it's a misnomer to call them momentum indicators for the most part. So they're really measuring acceleration. But the point is that when you've got trend going up, price direction going up, but deceleration, then that's probably not something that you want to trade. In other words, you don't really want to trade with the trend. Now, this momentum tends to be a leading indicator, so potential leading indicator. Nothing leads the market all the time. You need to learn how to read it. But it's definitely a warning sign. So, for example, we make another higher high on price here as we're making a lower high on momentum. And again, that's because quite often, not always, but quite often, strength will come out of the market before it actually reverses while it's still making higher highs. So in order to make this a true momentum indicator now, it's measuring acceleration, so we have to add weight to it. Momentum includes weight, and I translate that as volume. So here's volume. And so you see we get these volume, I call them little volume triangles. Boop, boop, boop. So as long as you get this, okay, that's pretty cool. And then when we look at this move here, yep, we still got it going on a little bit. And then we don't get those spikes anymore. So, and if you notice what's happening to our spikes, actually, let me take those off of there. And let me just get a straight line instead of an arrow. So here's our spike. Now there's our next spike. And then after that, see, after this high, what happens? Volume doesn't go back up and reach those spikes anymore, right? And so the momentum is no longer there. That's the point. Momentum is no longer there. So that's a great indication that, and again, it's a bit of a leading indicator in the sense that we have a lower high on volume, while we have a higher high on price. And what that would do, if I was in this trade, this is actually one of my trade setups, that would tell me, oh, okay, you know what, I think I'll just get out here. I'll just take all my profits right now because there's no more momentum. This trend, which was strong, is now turning into a weak trend because the volume is not supporting it. And if it's a weak trend, even though we've made a higher high, you can't just depend on a higher high. No, it's a higher high on weakness. And therefore, I'm going to lock in my profits, take my money, and wait for the next opportunity. So those are the first two energies. There's 5 energies that I look for on every chart. Those are the first two. Trend, simply the direction the market is moving in. And momentum, which you can understand as the strength behind the market, which includes both acceleration and volume. So in the next video, we'll go into that a little bit more. Look for part 2. And by the way, if you like this video and you're watching this on YouTube, go ahead and please click the thumbs up icon below. And hey, leave me a comment telling me what you'd like me to cover in future videos. I'm always looking for ideas for more videos, and I'd love to do what you are interested in. Also, I'm giving away one of my very favorite trade strategies. It's called the rubber band trade, and it has an extremely high win-loss ratio. It's a simple strategy. You can learn it in about 26 short minutes. Get that video explaining the trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it at the top right corner of this video, or there's also a link in the description below. And once you do that, I will personally email the video to you.